Today we're going to be talking about real estate investing versus stock options and said and done strategy by Cody Yeh. Hello everyone and welcome back to the Property Hustler Show. My name is Andrew and today Ping and I are joined by Cody Yeh, who is a 7-figure stock options investing coach. He is a real estate investor as well as the host of the Wealth Busters podcast. So Cody, it's really great to have you on the show.
Yeah, thanks for having me on the show.
Also, just so you know, stress the shit out of me when I was trying to invest.
I was just on a call at 11. This guy's like, I follow 30 stocks. And he's like, I'm doing Amazon, I'm doing Airbnb. I'm like, dude, like, what the fuck are you? Like, just calm down. Like, what are you trying to achieve? He's like, nah, man, Cody, I wanna do this game. I've been in this game for 10 years. I know what I'm doing. I'm like, then why are we on this call?
Right.
He's like, okay, let me take it back. It's just like, at the end of the day, what the whole said and done strategy does is I've seen so many students, how they were successful, how they were failing. Most of the times because they pick stocks and no one can pick stocks that way, not even Warren Buffett, right? So we take that away, we just use the S&P 500. It's been going up 8 to 10%. And if we're beating a double, right now we're beating a double.
Yeah,
you don't have to pick
easier.
any, just none of the nonsense, right?
Cool. Did you start investing in stock first or you started investing in real estate?
Stocks first, 2011.
Okay.
In
Wow,
school.
that's a long time.
That was like second year of university. I'm an engineer, right? Like we could start that, but anyway, we're in just second year. I couldn't take any more credit because engineers are flat out max, right? So I just sat in like accounting class, corporate finance class at night, and the professors are, who are you? I'm like, hey, I'm just an engineer that want to learn. Do you mind if I sit here? I promise you I won't eat or chat. So they're like, yeah, eventually they know me. So that's how I learned, man. And then I didn't learn much because I learned how the option pricing work and all that, but they don't teach you shit strategy, nothing. It's like, this is how you calculate. I'm like, yeah, so what? It was calculated online.
Yeah.
There's apps for this now.
Yeah, like, but that was how I started. And I went through all the courses, all the courses in Canada and around the world. Either I took it or a lot of my coaches take it. I just sent them out every 3 months. What do you guys want to learn? And I sent them out, and then they take it, come back. So how they compare what's good, what's bad from the students' complaint, feedback, what question they ask, and what kind of market research.
Yeah.
That's how we stay. We say we stay at top, but we're always learning. We have a lot of back end with like 250 pages of our own research. Every week we get on call with our coaches that what works, what doesn't. We have a small batch of student. We call them the beta student. They're like the best student, the most disciplined, and we roll out our changes and let them test it first before we roll out to the general student.
Wow.
Just like things like that, we spend so much. And that's why Alfonso and I hit up really well is fulfillment, right? We don't want to just be like, fuck, sell a course and no one complete it, no one do shit. And then they go like, yeah, Cody's stuff doesn't work. I'm like, shit, did you do it?
You know, people are quick to spend money on coaching, education, a course or whatever. I mean, how many times do you hear people is like they buy this $500 course here, they spend $1,000 there,
Ours
they
is
do
a
whatever.
lot more.
Yeah, well, whatever it is. I mean, it just mean like the 500 to 1,000 seems to be the barrier by which somebody will spend and they just don't think too much about it.
1,500 or less. I don't even need to get on call if it's 1,500 or less. I can text someone. I have team out text someone. They will buy it. But we don't sell anything. We sell anything more than 4K USD. 4K Canadian. Yeah. Anything above that.
Yeah, but the accountability that comes with it afterwards is hard to make somebody, because it's easy for them to spend the money. Yeah. It's hard to make them actually do what they're doing.
I'll show you. We have alumni tracker. Just ignore the names. We have everyone's name in here, and all the way from what we talk about in each call, all my coaches, how much they pay, how much they make, what are they struggling with, like all the way when they renew, This is like
awesome.
That's very good. Actually.
This is like we don't like, this is what we call fulfillment. Like if we put out, it's gonna be like that, right? And we keep tracking when did they join, like since 2021.
That's
right?
like
This
a
one,
CRM, yeah.
not really a CRM. It's more like I nail my operational manager on it.
Yeah.
That's why we know, and I can go in and say who's making money, who's not, and why is she losing money? I'm making money. Like what's going on?
Right.
So, and then we have like monthly calls. We have Discord group, and our coach's mandate is that if you message someone, don't reply in 3 days, yellow flag it. If they don't reply in a week, let me know. I will send a voice message like, hey, is everything okay? If they didn't tell us, they're on vacation, whatever. So there's like different ranking level.
Yeah, honestly, I think the hardest thing in I think today's society is change of behavior, right? Because like information is out there, right? You can grab YouTube information, right? There's tons of reels, right? There's a lot of information that you can actually process. But I think the hardest problem for a lot of people is that because there's so much information, how can you actually take the information and actually fully execute, right? That's why coaching business really started taking off, like I think 2-3 years ago, because people started realizing, hey, listen, like if with that kind of information, if I still cannot do anything, I need a coach to just tell me what not to do, right? Like just focus on what you need to do in the current stage of your life or business, and just focus on that until you hit a certain target, and then you can learn new thing.
Yeah, just guiding them, right? From 0 to 100, but as a coach, you got to guide them 0 to 10.
Yeah.
Okay, then 10 to 20.
Exactly.
Not like 0 to 100, like, oh man, this is way too much. This is not said and done. This is like said and too complicated. Right?
Yeah.
So like we don't.
That's awesome.
And we got to have them a quick win in 2 weeks. So you got to start making your first 4-figure in 2 weeks. That's what we fight for. Because if we nail them on that.
By the way, when did you change your whole strategy into this? Because obviously,
January 2022. That we were looking at that because the market kept going up. We're like, fuck, this is not right. Someone's gonna get hurt. There's a YouTube video coming. I'm gonna open up one of my more growth stock account. There's some stocks right down like Neo. I was down like 70%. But there's ways if you have a smaller amount in that portfolio, it's okay, right? Overall, I'm still up a little bit, right? But that's where it's not consistent. So that's where we're like, this is gonna screw a lot of people, and a lot of people get on calls like, Cody, this doesn't work. Pick stocks, and that's why we're doing all the back end research, and we're looking at all the bigger hedge fund. How do they scale? They scale because they're in big index, so they can easily go in, easily come out. If most people can't beat the index, and we're beating the index just by a more simpler way, like our whole back end team doesn't have to like track 30 stocks and who their CEO is.
Yeah,
that's crazy. Which we do have like inside trading. We know exactly like which director and which company are selling and buying at how much. We have those subscriptions, so we see it. So Mark Zuckerberg will be like, hey, I'm very bullish on Facebook, but I see that he's selling. I'm like, are you trying to liquidate something, or what are you doing? Right? So we can actually see those stuff, hedge fund and all that. So at the end of the day, we don't need to spend more time. Most people don't want a second job. It's more of just something that works. Better than real estate. I wouldn't say better than real estate when it's good, but better than private lending. You have full control. That's the most thing. And then the consistency. Yeah, I pulled back all my private money just beginning of 2022. I'm like, the moment that interest rates start rising, I'm like, anything unsecured, give it back. Give it back. I don't care. Don't pay me for a month. I don't care. Give it back. Because a lot of people take the money and funnel to different deals. You don't even know where the money is.
No, that's why a lot of investors are actually more concerned about the return of the capital rather than the return on the investment. Right?
Yeah, into an investment, they can make it up. Just like new money, old money.
Yeah.
Right?
Yeah,
new money to fund old money.
When did you start investing into real estate, by the way?
2016.
2016.
First one, this could be on a podcast too. The first story was, so at that time I was still working Honda. I started working Honda in 2013, intern full time. I was trying to save up. That's when I started join Rain. At that time, I was working in Alliston, like Barrie area. And at that time, I think I saved up like, I think 73,000 for all the overtime. I was like killing it. I was like putting 800 hours of overtime every year. Get all the money, pay half on tax. My mom was like, hey, we're going to buy this bungalow. I'm like, hey, hold up. I want to be part of it. So I put in a 73, and then my mom put in, I think, 37,000. And then we just bought it for $500,000. And now I think it's like 1.8 or 2. It's like a bungalow right on the LRT, Eglinton and Dufferin. Right at that corner, right there. Vaughan Road, if you guys know what I'm talking about. Vaughan Road. So that was the first one. And the second one is 2017. I was like, hey, if I'm going to stay at Honda, I don't really stay there, but I bought the house, a single family. I'm like, if I'm going to have a family, this is probably what the house would look like. 3-bedroom upstairs, a basement, whatever. Never stay in that house. Bought it for $460, sold it, I think, at the hype for like $999,000. And then 2019, convert 2 duplex. I think at that time, that's when I quit my full-time job. I didn't know much. I'm like, I didn't know if I quit my full-time job, brokers don't like me. So it took me a break of 2 years. I couldn't buy anything. I have money, but I can't buy anything. I don't want to go to B-Lander, all that. And then we start getting 2022. I built all business, everything shows, pay myself $100K. Okay, you guys like me again? Okay, we bought that bungalow in Bowmanville with a big lot, 53 by 220. And that's where we built the first ADU.
ADU, yeah. And
that's the upper and lower, like 11 feet main floor, 10 feet basement. And that's the one where Airbnb.
Was that 2 units or?
Yeah, so imagine this is the lot, existing bungalow here, and then the ADUs here. So we have the parking lot in the middle.
Nice.
Like 5.
And that's like 3 units, right? There's 1 bungalow plus 2 units.
And we put a door in the back so that if they change the zoning, we're like, okay, Leo duplex. You're a Leo duplexer. So we have 4-plex. The idea is I just have the one up front to carry all the mortgage, and this one is just pure profit. And if it doesn't make money, it doesn't make money. Who cares?
Right.
But this one's like getting like 4,000 plus, and they pay all the utility too. So before the rate hike, yeah, it carries everything. But now with the rate hike, we need a little bit more from here too.
Yeah.
So what do you think people should be doing, right? Like, because basically a lot of people will get into something like stocks. People will get into real estate and they have this idea of what it is, as in it's like maybe a passive thing. And people talk about systems as if though systems make everything always passive and they don't have to think about it. But people get into stocks, people get into real estate, and then they realize that they have more burdens in their mind because it's just keeping them up at night. Like you read this stock for a little bit and we even did like cryptos and other things. And then we just realized that our phones were just like, you're sitting there at dinner and you just want to look at it. Right? Or like if you have rental property and maybe you have like a couple tenants who are having problems, you're just like, is there rent coming in? And now people are just develop anxiety and interest rates are rising. People are feeling a certain way. How do you think people ought to be combating this?
I think it's a really common thing. It's very funny because we used to be like that when I was running everything, when I was doing all the research. I feel like that. I'm obligated. This is my second job. I got to sit here, do all the research and all that. And that's why we go through our set and done strategy. Is like, what is causing people the mental burden? What's causing people stress? What's making people lose money? And we take away all those and say, okay, this is how we're going to save everyone's time. And they know the worst case going in. Like they don't have to look at it. I don't even look at my phone, right? I mean, even when I have trays going on, the moment we put on the tray, even before the tray's been filled, we have a bracket order. How do we take profit? How do we take loss? So in case if we don't have internet or if we're in a meeting on an airplane, that would trigger. And we already know the probability in the back end. So that's like anything that we could do to get to that point, get the stress out. And I mean, I love real estate, but truthfully, like building that ADU put my fiance on stress leave for a month because she was tracking our spreadsheet, right? We spent 1.15 down payment, renovation, did all that. She was a manager at RBC, but I didn't know she didn't know how to use Excel. And I was doing all the heavy lifting, right? I was like, okay, just track that, just bookkeep that, right? And then just track and pay contractor. But I was doing all the heavy negotiation, going through all the contractor, going on site, make sure everything's okay and all that. But that put her on stress leave.
Project management.
I have a GC too. And then just with that and with the money flying around so much, she's never seen that kind of money flying around. She's like, wow, like, Cody, are we okay? Like, I'm like, hey, we're getting to the end of the tunnel, okay?
So we're like, hang on. Put your hands up.
We can't stop right here anyway.
We can't stop
too,
it. Exactly.
Too late to start. To stop.
Yeah, exactly. Like, you can't stop midway.
Yeah.
Once you're in, you're in, right? It's like, because you can't rent a house halfway.
Yeah.
So you actually in the worst case if you stop halfway, right? So
yeah.
How long did that ADU take? Because the permitting process, I would imagine being the first one is going to take a lot longer.
No, it was a lot sooner. It's a funny thing. So the ADU, I think we submit the permit beginning of July. I think got it.
Oh, wow. That's really good. 2022, 23?
Yeah, 2022.
22.
So we bought that place right at the hype. We sold that place, rolling all the money into this place. We bought it. I think it closed around March 14th because we firm it up on Valentine's Day. I still remember because we were firming up the Valentine's Day. Firm it up. I'm like, yeah, this is the good stuff. We're going to go buy at the highest price possible and then close on March 14th. We start legal duplex while working on the design, chat with the city and all that. So we have the design ready and submitted by beginning of July. So April, May, June, 3 months. Submitted. We got it in August and already have a few contractors lined up. I pick one and they start breaking ground beginning of September. And everything was built, done like end of March. So
that's actually pretty
we
good,
were like pushing through everything to get everything enclosed so that they can work inside when the frost start coming, right? So we did that. So they did all the pouring, We have a house, we have a structure, put in window. Okay, we can take a break.
You're safe at that point.
Yeah. All in all, probably about 10, 11, 12. Yeah, about 6 months, 7 months, all in.
You have it rented, right?
Yeah, now it's like short-term rental, mid-term rental.
Okay.
Yeah.
All right. How much does that generate, if you don't mind me asking?
Yeah, so we start that beginning of May. At first it was kind of slow because this is our first Airbnb. That's why I have Airbnb gurus back to back on my podcast from US, from Canada, because I want to ask them about this. I'm like, how do I do this, right? So I have some pointers offline, online. And I took a lot of courses. I sent Claudia to take all the courses. So my first month was kind of slow, was kind of panicking. Like, is this what's supposed to be? Like we started playing around with like the price lab, the Airbnb pricing. Second month, like I think we hit like 6,000 just for the whole house. So to rent
just the ADU or
just
the whole
ADU.
Okay,
Wow,
yeah,
that's
that's
very
good.
good.
So
That's really
in
good.
order to rent out that house like long term, it's like 3,000.
How many square feet is it?
It's about 950 first floor, 950 basement. So it's a two
Okay.
up, two down.
Okay, got it. So it's all the ADU has a basement.
Yes, ADU has a basement.
So it's like a
10
whole,
feet.
it's a whole other house.
It's in terms of volume, it's actually bigger than the bungalow up front. But in terms of square feet, it's 1 square feet smaller in terms of footage.
That's
So-
interesting. Okay, and so when you're building this was on an existing structure, right? When you got the permits to build it, there was already like a coach garage there or something.
No. It's a
It's just a-
53 by 220 lot. So it's like so before that, there was a bungalow here and there was a garage here that's blocking the whole entrance to the back. So
Yeah.
we have to take the whole garage down and put the house right in the middle of the lot.
And how much did you say you spent on the construction?
That's stupid. A stupid amount of money. All in all, for the ADU, it's about 510.
510 and 950.
So you pretty much built a house.
We pretty much built a house.
Yeah, you built a
'cause, like,
house.
when you said ADU, I'm thinking, you spent like maybe a couple $100,000.
It's not like one of those like slap on
yeah.
grade, boom. It was like at first I was like, if we're gonna move in,
By the way,
Claudia,
you might as well not say I built an ADU. You might as well say I built a house.
Yeah.
And I classified it as an ADU, and that
Yeah.
made it faster.
Yeah.
But you built a house.
a
because-
legit house,
Yeah,
a legit house
No,
with
that's-
everything, the footing, everything. Like
Okay, now $6,000 to me makes a lot more sense. I'm thinking, wow, ADUs, like you seen how they're advertising some of these 0.5 bedroom apartments ADUs in Toronto, like
Yeah.
half a bedroom, and they're
Yeah.
renting out for like $2,500, right?
Yeah.
These like people are living in people's alleyway garages, that are decked
laneway
out
housing.
nice. Yeah, laneway
yeah,
housing, right?
laneway housing.
And they're still classified as ADUs of a sort, and yeah, they're renting out for crazy, and that's why I'm thinking, wow, if you put those on Airbnb, you can do $6K. But no, if it's a whole house, it sounds like it's
Yeah. And then Airbnb in Toronto is a whole different game. Again, I'm not a guru. Just from what I know is that that needs to be your principal residence and you need to live in there and you can only have
the
one.
recent rules, yeah.
The recent rule. So that
I
really,
really wonder what the enforcement is even like with that type of thing. I mean,
They probably will go straight to Airbnb, right? Like
Yeah.
start from there rather than try to enforce anything. Because there's no way for them to actually hunt people down and see and check whether or not they're actually running it as Airbnb.
actually, there was a recent thing that went that was in the newspaper, and it was that somebody was basically renting out a property, quote unquote, and then they were Airbnb-ing the rented property. So technically, it wasn't anyone's principal residence, but what the landlord had done was they had rented out to their friend,
yeah.
right? And then their friend listed it on Airbnb
Right.
So their
And
friends are
then-
doing Airbnb arbitrage.
on their primary residence.
Yeah.
So technically speaking, it wasn't a legal issue. It was a landlord and tenant board issue because only by the LTB or the Residential Tenancies Act that your tenants are not allowed to rent the place for profit. But the whole law about Airbnb not on your personal residence, that's another law classification. So anyway, there was just some like issue there in the loophole. I thought that was
Wow.
kind of interesting because government of Canada always does these things to kind of try to micromanage and control everything without addressing the real
Yeah.
issues. And then people are just they make these really unenforceable blanket rules that rely so much on compliance that the minute anybody thinks, okay, well, how can I get around this? They find something stupid and easy like that.
We just maneuver it and then
Yeah.
roll with it. I mean, I'm not doing Airbnb arbitrage, so this is my house. And again, there's like mortgage side of things. There's like tax side of things, HSC side of things that we have to maneuver to make sure we don't get dinged in the back end and all that. Which that's a whole different topic. If you guys want to get into that rabbit hole, I'm just getting I'm paying thousands of dollars for like HSC specialists because I don't want to down the road when I sell the house that was deemed as a commercial.
Did you put that under your personal name or corporation?
That one's a personal name.
Personal name.
Because that one was supposed to be a principal resident.
Because then you can't claim back the HST. If that's the
But if you
case.
claim back the HST, that means it's a commercial.
Yes.
So when you
you're right.
sell on the back
right.
end, if you sell it for, right now is I think appraised at 1.6 mil. If down the road it's 3 mil, 5 mil, and you have to pay 13%. If you don't pay, you got
That'd be
to
crazy.
eat it, or your buyer's got to pay it.
Yeah.
And they're not going to pay it. So you make so much money over the years, but then they're not paying. You know, at the end of the day, they get dinged. Is it worth it with all this work? Right? So
Mhm.
that's the biggest point people don't talk about in Airbnb is like you have your tax figure.
These are the problems where a lot of people who get into this, they kind of look at these problems or potential problems and say, this is a problem for myself 5 years down the road when I have to deal with it. They don't think about it because right now people are in a position where they're just trying to figure out how to stay afloat. People are not thinking about the taxes right now. People are thinking about, their mortgages right now, and like their income, their daily bread and butter, right? Which is why people are diversifying and just trying to do whatever they can, wherever they can, just to make sure that that income is coming in and make sure that their bank accounts are steady. Because the recent interest rate hike, everybody's so certain now that they're going to increase it again in August, right?
Well, they just increased it, right, yesterday?
Yeah. And now they're pretty confident that's going to happen again. And it's just putting so much fear into people when people are looking at where they can find securities, where they can be safe, right?
Yeah.
Stocks, real estate, rents. People are doing all kinds of things now, right? So depends.
And there's also another, I guess, group of people. They're not even worrying about like where to park their money. They don't have the money. They need to like figure out how to generate more, right? So it's just like, people are right now. A lot of people are hurting for sure.
It's kind of like what you were saying with even some of the coaches. Like people, a lot of the gurus right now who were promoting what they're promoting end up finding themselves massively over leveraged and trying to figure out like what to do. And like we said, generate money out of thin air. Right? And unless they find somebody named Thin Air who's going to give them money, a lot of them are stuck.
Yeah, and their reputation's on the line, right? And if you buy the deal and doesn't have enough meat on the bone, when the interest rate hike, there's really a thin margin. I was always presenting at one of the real estate mastermind, a big conference, and a lot of people there were, just interested about that. It's a high interest rate. Okay, we can't buy. Okay, we can't refi to expand. And currently I'm under the water. So, and if I sell it now, they see those numbers, it's not going to sell well. Like, what am I going to do? There's just, I feel like so stuck, right? It's kind of like the elephant in the room, but no one really talk about that.
People don't talk about it maybe so openly, and people aren't being very truthful. We had some people on the podcast who talk a lot about being able to find a space where you can be vulnerable, right? And just be honest about what's going on. Because when you're honest with yourself and when you're honest with people who also have experience, then you can come up with some potential solutions.
Yeah.
I mean, it depends on like what you think is going on with the real estate market, right? Because when the real estate market gets affected, stocks also get affected. Things kind of have this cohesive way of influencing each other in terms of whether they're going up or down with it to a degree. When you start being honest about what's going on, you can come up with a battle plan. And then when you look at things, you can start to form opinions. Like right now, what was it? In June, we hit 40 million people. July, was it? No, June. We hit 40 million people. Canada, right?
Yeah, it's crazy.
I think somebody was showing me that they did a look on it for July.
Yeah.
You know what the population is now?
In Canada?
Yeah.
I don't know.
40,100,000.
Wow.
That's implying, I'm sure like there's probably some lagging data, but that means just another almost a couple 100,000 people came in, and it's like we're not building houses that quickly, right? So it's almost feeling like something's gonna give with the interest rates, I think, or rent's gonna get so massively expensive, and homeownership is gonna get so difficult and challenging. Yeah. Right. So one of the other is going to happen.
I just saw a report that in Toronto, one bedroom now has gone up to like 2,600, like on average.
My mom just rent out her apartment right on Bay and Bloor Street in Toronto for 2,700.
Wow.
Yeah.
One bedroom.
That's a one bed. That was the
insane.
apartment I stay in when I went to school in 2012. I paid my mom 1,800. But that was ridiculous. It was actually only 1,300. So I overpay my mom.
It's okay. Asian culture exploitation.
You know what I mean. You know where we go with that. Alfonso just called. So.
Obviously, right now, if for the advices that you would be giving out to people who are kind of in the difficult financial situation, you would ask them to try to figure out how to pick up a high income skill set, right? And obviously, like one of the things that you're offering is essentially your sitting down strategy, right? Is that the only thing that you would actually ask people to kind of look into right now, or?
There's fast money, there's medium speed money, and there's a slow money. And I think a lot of people confuse this concept. It's a very easy concept, but people confuse. For example, fast money is your full-time income job. That could be a realtor's job. That could be my coaching program job, money. Or it could be my said and done, because our turnover of trades, how fast we're going to take our money, is between 0 days to 20 days. So if people want to buy property, have a big purchase coming, they can do that too. So that's a fast money. You need like the income keep coming on weekly, bi-weekly, or even monthly basis. So that's fast money. So if people don't have enough of that and try to scale either their stock portfolio or real estate portfolio, it just won't work unless you start raising capital, and that just brings on more risks, right? And then the medium money is where like okay, this is where you were talking about like, hey, maybe you can sell some options on individual stocks, but stocks are more volatile. So you don't really know when it will return, but it's a good stock. You get paid a little bit, but you don't really know when you will get paid. And there's up and down. You can't pull the money out. And then the slow money is where the buy and hold cost average into the stock market or buy and hold real estate. If we go back a little bit, like Burr is kind of like in the medium, right?
Yeah.
Because you can have a good Burr or you can have a not good Burr when the interest rate goes up. You can't refi, but you're forced to refi. It's negative cash flow, right? So when time is good, it's good. But when time is bad, it's bad, right? So those are median speed. And then the slow one is really just buy and hold. You're passing on to your kids, insurance contract, like buying insurance and buying stocks, buying blue chip stocks, buying real estate and don't touch it for 20 years. Those are the buy and hold. But a lot of people mix up the whole concept. They're like, Cody, I'm trying to buy property so that I have enough cash flow so I can replace my fast money. I'm like, that doesn't work. You still got to make enough and that's consistent on this way so that you have proceeds to go do Burr, go qualify for mortgage or go buy more stocks, go buy more real estate. But a lot of people try to use that real estate as slow money and like, I got to replace my fast money. I'm like, well, the moment your roof goes off, what, 10K? Like,
yeah.
I hope you have a reserve there.
By the way, I love it because lately we've been talking to a lot of people from a program, which I'm not gonna name it, but they kept on saying that, oh, I need to get into like the real estate. But then I asked them about, hey, so how are you going to sustain your lifestyle and all that? Because Andrew and we went through that whole process back in I think 2014, 2015. Where nice. I already had a full student rentals at the time, right? Yeah. Positive cash flow, but it just wasn't enough for me to actually cover my lifestyle. Now, like with the interest rate being so high, like how are you going to actually carry your living expense? And all they say is that, oh, real estate is a long-term game, as though that's the reason to justify that. Oh, it's okay to not make any money. And then I'm like, okay, so how are you bringing the income? Oh, I got a full-time job, or I have to pick up a couple of different part-time jobs. So now you're talking about real estate investing. I think it's a little too early. You got an income problem. You don't have a problem with the investing. You got an income problem. Yeah. So let's talk about that a little bit, which is essentially what you're saying. We need to actually anchor this problem first.
Yeah.
Make sure that the money is flowing steady before we talk about investing in a long-term strategy.
Yeah. Because if you secure the fast money, like I have coaching, like I was a realtor at one point, but it just doesn't, I'm not the best realtor. You guys were a better one, so go follow them. But really, we got to figure out the fast money side. And then once we have that consistency, it's like a full-time job and it's consistent. You prove it to be consistent. Now the stress is off the shoulder. Everything else is truly more passive now, right? That's truly more passive. You're doing it, Burr. You can focus on that. You knowing that if something goes wrong, like this is a story I got on one of my podcasts. It's not released yet, but some guy came on. He's a wholesaler. I'm not gonna say his name. One of the top 10 wholesalers in Canada. When interest rate hike, he had 18 projects on the go. He has $10 million of hard money at 10%. And his partner ran away, just took off. So mortgage broker called him and be like, hey, you're still on a hook. You know that, right? He's like, okay. He was so bad to get to the point that he was thinking about declaring bankrupt, but he was the top 10 wholesaler. But because he took on too many projects, private loans and all that. And what really save him at the end of the day is because of his whole selling business. Because 10 million, 10%, that's 100K per month. He was able to make enough from wholesaling so that he was able to fill the hole and keep all those projects. Yes, real estate is long term, but if you can't even hold it, because he can't flip it. You sell it for a loss. You don't sell it, draining at 10%. So what are you going to do? You got to finish the project or do something. Rent it out, do something. But if you don't have money and you're bleeding, you can't, right? So there's a couple other people that went bankrupt, and he told me that was the major difference between them. He has this strong, consistent income coming from wholesaling, and that's how he was able to survive that 6 months to 12 months of the darkest period.
Right.
So like a lot of people is like,
it's a business income that helped him get.
Yeah, and it all works together, right? Sometimes, you pull out here to save your business if you need to expand or whatever. But if this keep coming, you can keep buying stuff, right? So it goes in a really good circle. But if you don't have all three, you only have the slow. It's like,
right. By the way, how much money would you say is enough for them to get into something like this, like sitting down strategy? Because let's say if it's only 5,000 and we're talking about, doesn't matter, like let's say 15-20%, right? It's still not enough. It's still not quite enough. So what would be the minimum starting point that you recommend other people.
Yeah.
Yeah, I understand that the skill set, like the sooner you can pick out, the better it is, right? And but yeah, sometimes I'm just always wondering about that percentage.
Yeah. So a lot of people say, Cody, with your send-down strategy, do I have to have the money to buy 100 shares of any stocks? That's the biggest question, right? If you buy Apple right now, that's at 180. 100 shares of it is at 18,000 USD. That's like what, 1 million Canadian, right? It's about 22 or whatever. So a lot of people ask me that. And that's another reason why we improve our send-down strategy to the point each trade only need as little as 5,000. And there's 2 ticker we use. The other one we use is minimum of 20,000. Not that we need 20,000, but we want the buffer, because if the market turn, we always have room to make adjustment and all that, right? So it's between 5K to 20,000 to really start their first trade. The more money they have, they can make more frequent trades, turnover, see the results. That's why they only need 5K to 20K to start and see results, right?
Right. Okay. No, that's actually good to know.
But most students don't come in with just those money, right? Most of them, like 87% of my students right now are real estate investors. So they have, like, let's say, some of them are trying to buy their first one. One of our student, Lewis, over the past 1 year, like I think he make about 60K. It's like, Cody, that's my down payment. That was the goal I told you from a year ago. So he scaled his account from 30K to 50K now to 100K, and he makes 60K. So he's like, Cody, that was my goal. I'm going to go buy a condo with that.
Nice.
I'm like, cool, yeah, that's great, right? Meanwhile, there's other VIPs that just come in and like, I have 6 million. Cody, I'm going to put $500,000 first month. If it works, 1.5 in 3 months. Been told, are you going to have a hedge fund? Okay. After that, I don't want to bother it. I see it for a year. You go manage it, right? You have a team and all that. So there's like a whole array of students, but all of them, I will say all of them, but 87% invest in real estate, and they're seeing that the real estate is truly more long-term. Unless you're wholesaling, you're flipping, you're burring. But a lot of that, it's just a lot tougher right now. A lot more risk, right? And you got to play it really well. And I know a few people that play it really well. They intact, but a lot of people, when they try to expand too fast, don't have the system built in or don't have the experience, like they could easily go south because the margin of error on high interest rate environments so small.
Okay, so the profit that you're getting from the let's say the send down strategy, would you recommend people to kind of put it back to the investment to grow that so that there's more like an exponential or compound interest back, or would you say that would essentially be prepare your capital to invest and then take that as your to kind of like as part of your living expense?
So we have the student doing different stuff, right? Meanwhile, the student I talk about, Lewis, makes 60K. He keep compounding it. Meanwhile, I have other students like, Cody, man, I really quit my job. I'm making 50K every month. I don't even need your coaching. You were so good that I don't need your coaching anymore. Cool, right? And then they're like taking out monies to spend it. And they probably don't need to take that much out. But so they take some out to spend it, some out for their lifestyle because they quit their full-time job, and then some to buy more real estate or just go buy like index or blue chip stock that they always want to buy. When you go in to buy those blue chip and think that what goes up, I need to pull out in 6 months, that's a lot of stress. But when they go use the money that they make to go buy, they're like, I really don't have to look at it. If it dropped 50%, I'm okay, right? I still have the money coming from this side.
I feel like people do want to know and understand that question because with interest rates rising, people do have the income problem. So in the beginning, the question was, what do you recommend somebody does? Like, talk to me. I say I have a house, okay? I have a family. I have a $700,000 mortgage, $5,000 coming up for renewal because people who are at 3.5% now coming up at the 5% increase or whatever, they're now getting like over $1,000 increase in their mortgage, no problem, right? Yeah. They're getting a significant increase, and now I have a little bit of money. I'm trying to think about like what to do because now I'm just a sinking ship.
Yeah.
Do I sell my property? Economy's not good. So what do I do?
We have $1 million on a mortgage on one of the house. Before the rate cut, I was getting 2.15%, and now it's like almost hitting the trigger point. Yeah. Right. So if the trigger point is hit, instead of paying $3,700 per month, it's going to go to $6,400. So whoever talk about that, hey, 1,000 or 1,500 cash flow, that's going to get wiped out because that renewal is going to come up, and it's coming up, I think, in 2 years. So I'm looking at it, I'm like, thank God I didn't refi that. So like, loan to value is like 50%. So I'm like, but that's still a lot, right? Yeah. So for people who like that, it's always good to have cash, but I'm assuming that if they don't have cash, they really get a pinch, right? It's like, Cody, should I sell this property? Maybe it's hard to get a buyer, hard to get a good price. But hey, if you really have to sell because you know you can't carry it for whatever reason, you need more cash. Yeah, you can put it in more active income. But if you don't sell and you say, Cody, you know what? I'm going to renew it and see if I can get it appraised, see if there's equity in there. I can appraise some money out. Yes, I'm paying 5%, 6%, whatever. But they got to make sure whatever they're going to use those money to do to generate more money has to be more consistent because you're already on leverage if you're going to use those money to make money.
So do you feel like the said and done strategy can solve that problem? Because it's ultimately an income problem that people have, right?
Usually I like students come in, I'm like, first thing, don't use leverage money. Because when you're when you're stressed, you might not be making the best decision. So like if people come in, I don't want people like take out credit card loans and put it in trading. I'm none of those people. If they take out really cheap loans or they borrow money from their parents, whatever, I'm like, well, you know, the risk, but you know, and all that. Right. But we do have a good track record, but I don't recommend starting. I recommend starting with cash. Even some people start with 10, 20K before they go pull money from elsewhere, but they see consistent results. Then have more confidence. Even if they get 100, 200K more HELOC, I don't say, don't put everything in. Maximum you're going to put in is 30%. I don't care what you say. Maximum is 30%. Because if something happened elsewhere of your life, you might need that money.
So basically it takes some of the money that they got.
Yeah. Like
diversifying into something like the said and done strategy.
You could consider that.
But will that, do you think like if somebody, because I'm trying to mirror and picture like the average person or even the average real estate investor, because people sometimes think of them as being sophisticated with businesses, and not everybody who invests in real estate and is a landlord owns property. People own 5, 6 property. They're not business people.
Yeah.
They're a husband and wife that saved and bought real estate, refinanced it, bought it again, and they're kind of leveraged, but everything was working out okay. This is the average Canadian real estate investor, not business, not very sophisticated, but they're starting to encounter problems. So they have a little bit of money to work with. They have to make a play, and they're trying to figure out what they do. And some people are looking to stocks now because, you know, they're thinking maybe it's a little more passive, maybe it's a little less headache. But either way, they don't necessarily want to sell because they're going to take a big hit. And that's what they're trying to do. So if somebody's like that, family, kids, $20,000 that they can play with, you're saying 30% of that maybe use in the said and done strategy, and then try to make some money over there. And what kind of supplement do you think that would be towards their technically sinking ship?
We could do quick math here. Our said and done strategy is targeting, and I said that on the TD Bank's webinar as well, we're targeting 18 to 54% per year. Yeah. So that's more than the private lending.
Oh, way more. 18 to 54.
Yeah, I've known unsecured loans are getting 18%, but I really question those numbers, and I don't want to ask where the money is going. Are they really trying to bridge something, right? Private lending, secure, first position, usually what, 6 to 8%?
Right now, private lending is doing 12 to 14.
First position.
If you do any of the regular ones, you're looking at what, 8?
You mean private lending for the first position?
First position, title, on title.
Honestly, it's still probably like 10%, 10 to 11%.
So 10 to 11.
6 and 7 was a while ago now.
So second position, how much?
14, 15?
Yeah.
14. Easily. Yeah.
Unsecured?
Credit cards, 20%.
Yeah, 18 to 20%.
Yeah. So like if we can have a way that you don't have to sweat about that, ever have to take over property or go after corporate, and you have full control and you can see it, it's all you. You can't blame anyone else. You learn a good system. Yeah, like if you have like 100K in there, 18% on low end, 18,000, mid end 30%, 30K. 30K is someone's full-time income, but you know, it's not like it's all sunshine and rainbow. You got to put in time, like 10 to 30 hours to learn it. For beginner people, they got to learn that. But once they learn it, it's only 30 minutes per week because we have coaches reading all the news and we don't pick stocks. So there's only one ticker and all that. Not just about, hey, we're going to get the money. It's like right now, those people are probably trying to do stuff like, for example, turning their property into short-term rental. That's why we did with our ADU, right? But then short-term rental is not doing well this year because no one's traveling. Numbers down like more than 50%, right? So if that's exhausted, you're like, okay, should I sell my property? And if you really have to sell, you have to sell, right? I rather, if you have 5 property, you're like, hey, if you really have to sell one, just to alleviate some stress so we can rethink and reallocate the money, maybe put the right reserve fund for each property and then have more funds to allocate to other stuff. It's not the end of the world, right? But if you can hold on to it, hold on to it. But don't start doing like crazy stuff like pull all the money and your numbers just don't work well, right? But I think a lot of people just have way too many jobs that's consuming a lot of their time that's not making them enough money. The side hustle, they go on Amazon, FBA.
Oh, that's a tough job. By
That's,
the way.
that's a hard one.
Yeah.
You wouldn't believe it. I just got on a call. This guy is that I did painting. He started a painting company and he started selling stuff on Amazon and he started doing day trading and he started doing all that. I'm like,
Too many things.
so what are you really trying to achieve? What's your goal? Are you really just trying to get adrenaline because you start new things, or do you actually want to make money and have a consistent income so you can get your time back? And then that was the person I'm like, you're not even worth talking about any coaching, bro. It just really, just go figure it out first. Okay, go figure it out first.
Yeah.
Right. So I think what the set and down strategy really help out people is that they have, most of them are real estate investors, whether they want to save up for their first down payment or already have a few property, some of them are in the pinch, they have some equity in there. Is like, Cody, can we use those equity to make some better return? We have a spread in between. That's not private lending. I still want to be passive. I want full control. That could be something, but I say don't use more than 30%. If they really come to the point that they have to sell one property, so be it. You still have 4. Sell it. It's fine. It's not the end of the world.
Yeah.
There's no bragging about I have 4 now and 5. Like, it doesn't.
No one's gonna look at you any differently.
Yeah.
You're still a douchey landlord.
Yeah.
Like, that's all it is.
Yeah.
No, and that's where I feel like sometimes people need to really realize the truth about the market, right? It's not always going to be sunshine and rainbows. People are so happy to make a ton of money in real estate, but the minute they lose a little bit, it's just like, can't do it. Unwilling to realize losses, but there's nothing wrong with taking one step back in order to take 2 steps forward. And if that's going to alleviate some stress, it's definitely the right way to go. It's interesting, the approach, but do you consider the set and done strategy and putting the money into the stocks the way you do you consider it short-term or mid-term income?
Set and done short term.
Short term.
Like I said, because each of our trade, usually we exit the trade between 1 to 20 days. And I have like a lot of my students come on, like I just ran a boot camp. I have a few students come on and say, hey, so I say it's 1 to 20 days. What do you guys think? Oh yeah, maximum maybe 1 month. Because the thing about that is, if you really, really pinch, you really want to take the money out. If your position's not going well, and we target to make 18 to 54%. But if you really need your money at the time that's your position get challenged, everything goes south. Okay, we do have a stop loss of 3 to 6%. So if COVID happened again, we're making 18 to 54 year after year after year. We have to take a loss because it triggers so fast. So be it. We are not holding any back of stock. Second, we still have our 12% up, and then we can regroup and say, should we enter now or should we wait for a little bit?
Yeah.
And that's okay. Right?
So question for you, how do you actually get into the stock, get into an index fund, and then expect that 12% right off the bat? Because you're saying
it's not 12%. We're doing boring stuff. So each trade might make 0.5% every month or maybe 1.5, but because our probability of winning is so high, so we turn over the trades a lot faster. We make the same amount of trade. It's not like each trade I'm aiming for 4.5%. Might be each trade between 0.5 to 1.5 because we execute the trades. And because of all the research I've done, we try to predict where the market is going. Is it up or is it down in the short amount of time? If we're right on that, we can turn over our trades faster. But even if we're wrong, we're the insurance seller. So we're still getting paid the money to wait. So if the market doesn't go haywire, like 15% up or 15% down, we're okay, right? A month ago, when the market shot up like 10 to 15%, the whole index shot up. That's when we got into the part where we need our active management skills, right? That's where some people take a little bit of losses. Meanwhile, my account went from 32% in the last 9 months, drop it down to 24. And because of our active management strategy, it came back up to 32 in 2 weeks. And now it's at 35. So there's those hiccup, and you got to make the decisions that, hey, do you want to take a small loss, call it a day, or if someone who's a more hands-on, we have active management, right? For me, it's like second nature, and that's where people like when they have a bigger account, they'll probably consider learning that. That's part of our program too. But some people just like 32, okay, 24, fine. Yeah. I don't want to do any of that. Okay, 24. They're still at 24.
Here's the thing. You've been in this industry for like over 12, 13 years, right? Since 2011, 2012.
Yeah, 2011, 2012, we're really just in school, just dabble in, really trying to figure out and trying to learn strategy. But all we learn is school, right? School, how to calculate pricing, not really a strategy, right? I didn't learn all these fast money, medium money, and slow money. Right, short term, mid term, long term. I didn't learn any of that. They don't never talk about that in school. We have to like piece it together over the years of, okay, so this is what real estate really is. This is what business really is. This is what Airbnb really is. Okay. Right. So now I got to make sure all of them are making money. And if some of them are not making money, that's where it can fill in for other business. Or should I do something? Right. But a lot of people just put in the wrong bucket. Maybe the mindset was wrong, or they just been taught wrong. And they're like, yeah, like I said earlier, right? They're trying to use the rental property as a way of fast money. They can replace their income. And when you're negative cash flow, the more property you have, the bigger trouble you have, really.
A lot of people who are in real estate are obviously looking at alternate ways to invest their money, and definitely people are looking at stocks. But somebody like me who doesn't know a lot about stocks or trading, tell me, what's the difference between somebody who's doing swing trading and what you're doing?
So somebody who's doing swing trading, first of all, I have a lot of friends that's doing swing trading. Some of them are really good at it. But in order to identify that, most people have a big watch list. So they got to do a lot of research. You got to look at all these candlesticks and all. They spend so much time, which I was a day trader at one point, 2015 to 2017. And I was losing money the first 8 months. And I had a coach, and I was angry at my coach. My coach said, don't be angry at me. This is the necessarily process. So like 90% of the people in their first year of doing swing trading or whatever actually lose money. Day trading, swing trading, lose money. And what's the difference between said and done and swing trading is that we are on the side where that if the price don't even move, time goes by, we're like an insurance company. So for the people who are betting, they need the time to be right and the price to move in their direction. For us, is that if the price don't move, we still collect all the money. As long as the price don't move more than 15% on S&P 500 over in 1 month, we're not in trouble. But if they really move that fast, like a month ago, we have active management strategy.
What's the potential exposure loss? Because we talked, you mentioned what are the potential gains, like small percentages, but incrementally, what is the potential exposure on like a massive drop that you don't catch? Like what is the investors the investors, what is their exposure?
Yeah. There's the good side, there's a bad side, right? So like the people who put their trades in and don't follow our system, don't put in a stop loss, or don't tell anyone what they're doing and go on vacation, have a set and forget. If the market really turn, they can get into trouble. But if they follow that and say, hey, we only have a maximum loss of 3 to 6%, and we regroup, or you get to active manage that. We're going to move stuff around to move with the trend. Yeah. And that's what I did, right? So there's a few choice. But if people just, Cody, I know you said set and done, but this is a set and forget for me. I'm like, hey, you got to really watch out.
You got to be careful.
You got to be careful, right? That's why when we enter the trade, we already have a taking profit, taking loss order going in.
So is there a percentage loss that you may suffer? Because you said 15%, right?
Yeah. So my account, like everyone saw, like this is all on Instagram, YouTube and all that. So my account went 32%, went back down to 24. I think 22 to 24, because I know I'm going to active manage that. I let it run a little bit more, but usually people could just take loss at 6%, or they're going to start active managing and then go with the trend, right?
So you can do like, you can be downwards on like an 8-10% down.
And we're playing the probability game. Our win rate is about 95. And then with the all the other research we've done, we're pushing up to 98, but there's still 2% chance that when the market moves too fast, and then that's when we're like regroup, like, okay, are we going to take some losses or just active manage that? And
can you use the exact same strategy back in, let's say, during COVID time, right? Because the market was shifting down way too quickly.
Yeah, that's such a good question, because all our coaches are doing, like we use different backtesting tools on options, on futures. Even TD Think was from won't survive, so I have to use Tasty Trade and all that stuff. COVID timing is the time when the market dropped more than, like not more than, but right on 30% in 1 month. So at that time, we keep analyzing. If that happens again, either it goes up or go down that fast, what are we going to do? So first of all, we have the stop loss going at 3 to 6%. Okay, that will catch it. And when COVID really happened like that, I will probably just take the losses and say, hey, 32 to 24, fine. I'm still up 24, but who knows where this is going, right? Or I can say, you know what? I will active manage. That's what we call like an insurance broker. We just buy ourselves a little bit more time for the market to gain back the rationale. And then it went down 30%. It came back up in 2 months. So we just buy ourselves a little bit more time. But that's more like making sure that the person who's in that trade did not over leverage. For example, I say 5K, but actually everyone who put in a trade needs to have 10K. We put an internal buffer for our coaches to control those. So people think that, oh, you say 5K, I'm going to put 8K. No, it's actually, we have a calculation. We know when certain things happen, this is the maximum, and we give it even more. right? For those human error greediness. So yeah, you can take a small loss, but you're still up overall, or you can act as manage, just buy yourself a little bit more time, but might create a little bit more stress. But if you're more experienced and trained for it, we keep training people. Like all these past month, it was a good experience because a lot of people say, Cody, I didn't know like I could be in the red even when the market goes up. I was like, yeah, this is a good learning experience. And a lot of them learning, we're like, holy cow. So I can either take a small loss or I can actually active manage and ride through it. And the market just like when it go haywire, options kind of like whenever people panic, uncertainty, everything just go haywire, right? So it will calm down.
Now, I think, by the way, this sounds like an amazing option for people who can at least understand, because from what you've explained, my take is this, that for people who don't want to be thinking about things too much, this sounds like a great option for them to be putting things in and just very like loosely checking on. But then when media starts kicking in and you know things are happening, that's also going to be an indicator that you should probably check what's going on.
Yeah.
And that's the indicator. Otherwise, your controls should all be in place to kind of make sure
In worst
that
case, your stop loss get triggered.
Yeah.
Cool.
Exactly.
When did that? How often does a market move 10% in one way? The last time before last month was COVID, and maybe December 2022. So if every year we have to take a small loss at 3 to 6%, but we're overall still up.
That's not too greedy.
That's part of the game, right?
That's part of the probability game.
Yeah, that's part of the
And you
game.
can decide whether you want to manage it or not.
Yeah.
So if anybody wants to get in touch with you, because I know a lot of people are looking for some diversification right now. If anybody wants to get in touch with you, what's the best way?
Cody Yeh. I have a YouTube channel, Cody Yeh Investing. I'm on Instagram, TikTok. I don't know the login account, but my social media managers know. So
search Cody Yeh, they'll find you.
Yeah, Cody Yeh on Google, you will find me. And I am not hiding under a rock. So there's a lot of free content too. Sometimes we run boot camp. We just ran one first time ever. I never run a boot camp. Sometimes there's a webinar coming up, and there's so much content. You can even go on TD's YouTube channel, search up Cody Yeh, and you can watch my interview with them. Right, 2 years in a row, like 3 interviews. Yeah,
perfect. All right, awesome. It was really great to have you on the show.
Yeah, thanks for having me.